So we'll continue our discussion on economy. We have started off with the module taxation, right? And so far we have completed around 5 lectures. In the first session we talked about some important terms related to taxation, like we have discussed what is tax, what is cess, right? Then we talked about what is surcharge, and also in that session we have talked about different types of taxes. So what are the different types of taxes? Let me go for a quick recap of what all things we have done so far. So type of taxes under which we started with proportional tax, right? And we have discussed that there is a flat rate of tax like this. This is the tax rate, and this is the taxable income. So irrespective of the income, whatever be the income, there is a same tax, okay, common tax. For example, like corporate income tax at 30%. Okay, so this is what we have seen as proportional tax. Then we have seen progressive tax, and progressive taxes like this. I'm not drawing again this x-axis and y-axis, it is the same. Progressive tax will go like this. That means when the taxable income is increasing, the tax rate also increasing, and we are following that system. And there will be regressive tax, that also we have discussed. That is a reverse of progressive tax. When the taxable income is increasing, the tax rate is actually coming down. And finally we have discussed about degressive tax. Okay, so to some extent it will act as a progressive tax, and then it will act as a proportional tax. So it's a combination of both, right? So to some extent, up to some tax, up to some income, it will be like the tax rates are increasing when the income is increasing, but after that there is a common flat rate. Okay, so this we have discussed, and then we have also discussed certain concepts like tax deduction. Okay, we have discussed about impact of tax. Okay, impact of tax. We have also discussed about incidence of tax. So these are the terms and concepts that we actually covered in our first video. So if you have any doubts regarding these topics, please go and watch the first video, that is the concepts related to taxation. And then in the second video, I think we have started off with direct taxes. Okay, so we have covered all the 12 direct taxes. Okay, we have started off with personal income tax. We have discussed that in detail. We have discussed about wealth tax, and I also told you how and why wealth tax is abolished. Okay, and then we have discussed about corporate income tax. Okay, we have discussed about the concept of presumptive tax, and under presumptive tax, as an example, we have discussed about MAT. I've told you where it is imposed and when it is imposed. And we have also discussed about AMT in case of partnerships and proprietorship. Okay, and then we have also discussed about gift tax. We have discussed about dividend distribution tax. We have discussed about capital gains tax. Okay, then we have discussed about house tax or property tax. Then we have discussed about securities transaction tax. We have also discussed about commodities transaction tax, and then we discussed about stamp duty. So all these are the direct taxes that we have discussed, and we have also understood what is presumptive tax. Okay, then we also talked about indirect taxes, and then I told you the ideal concept of indirect tax, which is VAT. We have discussed VAT in detail. I've told you the advantages, and then I also told you what is a problem that developing countries actually face to implement this ideal concept of VAT, and the practical version of VAT also we have discussed that we are doing now in terms of GST. Otherwise, in 1986, central government introduced MODVAT. Okay, we have discussed that. We have discussed about SENVAT also. MODVAT was then replaced as a SENVAT in 2000, and this is at the center level on excise. On sales, there was a state VAT. Okay, there was a state VAT. We have discussed about this also, and then we discussed about GST, features of GST Act also we have discussed. And then in the last module, we have talked about the concepts of tax evasion. We have discussed this in detail. We have also talked about tax avoidance. Okay, we have discussed about tax mitigation. Okay, and then connected to this, we have actually discussed about GAR, the General Anti-Avoidance Rule. We have also discussed SAR, some specific anti-avoidance rule, and one of the most important concepts related to GAR, that is tax terrorism, that also we have covered. Okay, committee on GAR, we have discussed the recommendations, we have discussed why it was postponed, and all those concepts we have discussed. I've also told you what is DTAA, double taxation avoidance agreement, and how is it misused. We have also talked about treaty shopping, round tripping. All these concepts are so far covered in this particular module. Now, what I can tell you now is most of the important concepts related to UPSC exam is over. You don't want to read anything else for this particular module, taxation, if you have gone through these 5 lectures. And in this lecture, what I'll do is I'll be covering 2 topics. As you have seen in the thumbnail, we will be going for tax reforms post-91 onwards. Okay, 1991 onwards, and then we will also cover tax administrative reform commission. Okay, so TARC. So these are the 2 topics that we are going to cover today. So here in tax reforms, basically I'll be talking about 2 committees. Okay, so first I'll talk about in 1991, when we discussed about banking setup, banking system, we have discussed about a committee related to Narasimham Committee, right? Narasimham Committee, and I've told you most of the recommendations were implemented. And parallelly, related to this, okay, related to taxation, there was a committee, Chelaya Committee. So I'll be talking about that. And then later, one more committee we need to discuss, that is Kelkar Committee. Okay, so basically that is a task force on direct taxes and task force on indirect taxes. There were 2 committees. Okay, that's what we call as Kelkar Committee, and we'll discuss that. Okay, and then we'll go to Tax Administrative Reform Commission, and we'll see the recommendations also. So let's get started. If you have any doubt related to anything that we have discussed so far, you can get in touch with me. This is my Instagram ID. Okay, you can follow me here for any doubts related to civil service examination. So tax reforms 1991 onwards. Okay, so in 1991 there was a committee, as I have already told you, Chelaya Committee, or Tax Reforms Committee. Okay, most of the recommendations of this committee are accepted, so this committee is actually very important for us, just like Narasimham Committee 1, okay, that we have discussed before when we discussed about banking, one of the most important committee related to banking setup. Okay, so here let's quickly look into those recommendations. The first recommendation is actually the tax rates of all direct and indirect taxes to be reduced. So the tax rate should be reduced. Okay, so let me write it down. The tax rates of all direct and indirect taxes should be reduced. Okay, see, at that time income tax, you know how much it was? It was around 50%, and in some cases people were supposed to pay around 97.5% in case of certain, 97.25% in case of some kind of incomes. Okay, so it was so high. And if you see customs duty was around 400%. There are common items like 100% to 200%, but in some cases it will go up to 400%. Okay, so the first recommendation is actually it has to be reduced. Now what are the rates? You already know, we have discussed in the beginning itself. So you can see it was reduced, but even now also it is not so low, not very low. It is moderate, or you can even say moderately high. Okay, but the point is government accepted this recommendation. We have reduced the tax, but still it is moderately high. Now let's move on to the second recommendation. Second recommendation is actually the number of tax slabs to be reduced. That means different rates, different slabs means different rates are there. So that has to be reduced, because there will be confusion. If more slabs are there, where you fit in will be a confusion. Okay, so let me write it down, then I'll explain that. Second one, tax slabs should be reduced. Okay, see now what are the tax slabs? Up to there are three rates, that is 5%, 20% and 30%. Before that was not the case, starting from 10, 15, okay, 50, 15, 20, 25, 30, 35, 40, 45, 50. So these are the different slabs. So people having this confusion where you will actually go and fit in. Similarly, in case of excise also, there were around 18 different slabs were there, 18 different taxes were there. So that will generate confusion. Even in case of customs also, there were 17 different types of different slabs were there, different rates were there. Now there are only 3. Okay, so here you can see in case of income tax, now only 3 stages. Now excise, now it was actually GST. Okay, so in case of customs also, it is actually reduced. So this recommendation is actually accepted by the government. Now the third recommendation was service tax to be introduced or imposed. Till then there was no concept of service tax, and it was actually introduced in 1994. Okay, so service tax should be introduced, and it was introduced in 1994. Now initially it was introduced on 3 services, but now almost all the services are taxed except a few services. Okay, like some kind of educational services, some medical services. Okay, so these kinds of, some of the cinematography, some of the cases were actually exempted from service tax. Then next recommendation is actually presumptive tax to be imposed. You already know what is presumptive tax. If you have any confusion, you have to go back and you have to refer that particular video. I've just before also I've mentioned that point where it is located. I've already told you. So if you remember, the idea of presumptive tax is basically the firms or the people, when they are paying the tax, they are showing low income, okay, or low wealth and low income or low taxable income, less taxable income. They'll try to reduce the taxable income. How can you do that? Let's suppose your book profit is, book profit is 10 lakh. What you will do is you will show your expenses as, let's say, 9 lakhs. So your taxable income will be 1 lakh, because this is the deduction, right? This expenses will be the deduction. So 1 lakh is the taxable income. You can see here huge deduction is there. So it is actually misusing the provisions by showing high expenditure. So here the government is taking an assumption that it is actually misusing, and that's why these taxes are known as presumptive tax. And see, in case if it is corporate income tax, normally for this 1 lakh only now you can tax, right? So that means at 30% you'll have to pay 30,000 tax for this 1 lakh. But if it is MAT is one of the example of presumptive tax. Under MAT you have to pay 18.5% on the book profit. That means here in this case 1,85,000 you need to pay, but you don't want to pay both. You need to pay either of them, whichever is higher. So if you are showing 1 lakh as your income and you are supposed to pay 30,000 tax, government will tell you no, you don't want to pay that, you need to pay MAT. Okay, because the assumption is there is no need to show more reduction than 20%. There is no logic. If you're showing that, there are some kind of manipulations are going on. So government is allowing up to 18.5%. Okay, so 18.5% is what you need to pay in under MAT. Okay, and see, we have to discuss this point. Presumptive taxes to be imposed. We have already discussed this. Actually, it was imposed MAT. It was in 1996, right? MAT was imposed on 1996. Even AMT also introduced later. AMT is also a presumptive tax. The next recommendation is actually the taxation system. Taxation system should be simplified by reducing exemptions, deductions, etc. So you have to simplify the taxation system by reducing this exemptions, deductions and all. Next recommendation is actually the MODVAT that was introduced in 1986 has to be converted to a full-fledged VAT. Okay, so MODVAT should be converted to a full-fledged VAT. Okay, and we have seen in 2000 it was changed to sen VAT, which is again a modified form of full-fledged or ideal VAT. And I told you it is very difficult, in practically it is impossible to implement the ideal concept of VAT. The practical version of VAT is what we are implementing now, that is GST. So the government actually accepted and government introduced GST. Okay, next is agricultural income of non-agriculturist. Okay, non-agriculturist should be taxed. Okay, but this was not actually accepted by the government at that time. But later, the next committee that we are going to discuss, that is Kelkar Committee. Kelkar Committee also recommended the same suggestion, because this non-agriculturist means what? Non-agriculturist means they are not the regular agricultural laborers or agricultural dependent people. They have some other jobs, they may be working somewhere else, and they will be earning also. So the problem here is they are not agriculturalist. So the point is their other incomes can be they can actually claim that these are agricultural incomes. So there is a possibility that the black money can be generated. They can make that money white without paying tax through agricultural income, by claiming that those incomes were actually developed or created from agriculture. Okay, so that is the reason why in case of non-agriculturalist, agricultural income should be taxed. Okay, otherwise there will be a mix and that will become a problem. It will be difficult to separate and it will be difficult to identify. If they claim that these are agricultural income, what you can do? And especially this is not a cashless economy, this is not a well organized sector, so there is a big problem. Next recommendation that is also very important, there are some specific taxes, right? So the specific taxes should be replaced by ad valorem taxes. Okay, see these two terms, I will explain these two terms. Specific taxes, actually these are not taxes, these are the method or ways of imposition of taxes. Okay, so what is this case, ad valorem taxes? So let me explain this. Next recommendation that is also very important, there are some specific taxes, right? So the specific taxes should be replaced by ad valorem taxes. Okay, see these two terms, I will explain these two terms. Specific taxes, actually these are not taxes, these are the method or ways of imposition of taxes. Okay, so what is this case, ad valorem taxes? So let me explain this. Ad valorem taxes. Now I told you this is a method of imposition of tax. And what is a method here? You will be imposing tax as certain percentage of the value added or value of output. Okay, so as a percentage of value added or value of output. Then what about specific taxes? It is actually imposed on the basis of the unit size, length, okay, in terms of meters, in terms of liters. So it is based on certain units. Okay, so imposed on the basis of unit size, weight, volume, length, etc. For example, petroleum products in terms of liters, right, volume, and cloth if you take in terms of meters, so length, like that. So taxes are imposed. Okay, so for example, if this pen cost, if there are two ways in which I can impose a tax. Maybe the tax revenue will be same. For example, I am saying 10% tax. Okay, so the value of output is 10 rupee in this case of pen. If you take the value of pen 10 rupee, so 10%, what the tax you need to pay? 1 rupee is the tax you need to pay under this method. And if the government is saying per marker 1 rupee is the tax, means that is specific tax. So 2 marker 2 rupee, 3 marker 3 rupee. Okay, or 3 pen 3 rupee. Similarly, 3 pen actually costing 30, so 10% of 33. Both are same. Actually the revenue is same, but the method of imposition is different. Now the question is, which one is better? See, definitely ad valorem taxes are better, because with time the cost of this pen will change. It will change from 10 to 15. But government is saying per pen 1 rupee. Even if the cost is changed, it will be 1 rupee unless the government has notified or changed tax. But if you are charging as a percentage, as soon as the price of the pen change, the tax collected will also change. So there is a possibility that it is actually good for government to increase tax revenue if you are following ad valorem taxes. If there is an increase in the goods and services or the value of output, there will be definitely an increase in the revenue collected. So that is the reason why this committee recommended change from specific tax to ad valorem taxes. I hope this point is very clear. I just want to explain you the two methods in which tax is imposed, and I also want to convince you, I want to tell you that this is better, because government don't want to notify again and again there's a tax that you need to pay. If you fix it at 10%, despite whether the value of output is increasing or decreasing, it doesn't matter, you have to pay 10%. Okay, so I hope this is clear for all of you. And next is actually Kelkar Committee. Actually, two were there. I've already told you, that is task force on direct taxes, and then task force on indirect tax. So the report was in 2002, and we'll see what all the recommendations in direct taxes case and in indirect tax case also we'll see. Okay, so in case of direct tax, the first recommendation is actually in case of personal income tax. See, the exemption limit was 50,000 at that time, and it has to be increased to 1 lakh. Now there is no significance, because now you know the exemption limit is actually 2.5 lakh. But I just told you this recommendation. Second, corporate income tax to be reduced to 30 and 35. 30 for domestic companies and 35 for foreign companies. Okay, and in case of domestic companies, it is actually accepted, because before it was 35% for domestic company, now it is 30%. But this was not accepted. 40% was there for foreign companies before, and if you remember, we have discussed this already. Now also it is 40% for foreign companies. Okay, then next point is capital gains tax. I have already discussed this tax in direct taxes, and at that time also I have taken this example. Capital gains tax in long term on listed securities to be abolished. Okay, so what is the long term means? In case of listed security, I have told you 1 year. So if you are investing in share, if you're selling it before 1 year, in 6 months, there will be a capital gain tax which you have to pay. But if you're selling it and you're gaining something out of it after 1 year, you don't want to pay any tax, because capital gains tax is actually abolished in case of long term. What is that long term? 1 year. In case of physical assets, in case of physical capitals, it is different. It is 3 years. All those things we have already discussed, so I'm not getting into that. What I want to tell you is this is also actually accepted. All are accepted. So in case of indirect taxes, let me discuss about that also. Indirect taxes. The first one, actually at that time it was SENVAT, right? In 2000, SENVAT was introduced. 1986 MODVAT, that was replaced with SENVAT. And the first point was SENVAT to be extended to more items. Okay, so SENVAT to be extended. Second was service tax to be extended. Service tax to be extended, because you need to tax almost all the service, and that is also accepted. First one is also accepted. Now every service is taxed except few, and I've told you some educational service, some medical services, etc. were exempted. Third, full-fledged VAT. Okay, that we have already discussed before in the previous committee also, and then I've told you now we are with GST. That is the practical version of VAT. Okay, customs duty to be decreased to ASEAN levels. What are the normal levels at the ASEAN countries? So follow that. And that also was accepted by the government. So these are two major committees which we need to have some idea when we discuss about tax reforms post 1991, Chelaya Committee and Kelkar Committee. Now let's discuss about Tax Administrative Reform Commission. Tax Administrative Reform Commission, TARC. When it was established in 2014, the report in 2014-15. Why in 2014-15 is because there were 4 reports. Okay, out of this 3 came in 2014 and 1 came in 2015. That's why in 2015 and 14 I have written. Okay, now who was the chairman? We have already discussed about this person before when we discussed about GAR, Parthasarathi Shaw. Okay, Parthasarathi Shaw. Now let's look into the recommendations of this committee. The first recommendation is, the post of Revenue Secretary as the head of IT department should be abolished and it should be headed by a taxation expert. Okay, so let me write it down. The post of Revenue Secretary as head of IT department should be abolished and it should be headed by a taxation expert. And what do you think, will it be accepted or not? It is not actually accepted. Okay, now let's look into the second one. Second one is the Central Board of Direct Taxes. The Central Board of Direct Taxes, I'm just writing CBDT only, Central Board of Direct Taxes, and Central Board of Excise and Customs should coordinate their activities and gradually merged into Central Board of Direct and Indirect Taxes. Okay, so Central Board of Direct and Indirect Taxes within 10 years. Okay, so what they're saying was Central Board of Direct Taxes, that is CBDT, and Central Board of Excise and Customs, that is CBEC, to be merged into CBDIT, Central Board of Direct and Indirect Taxes. Okay, now is that accepted or see, what happened is government accepted this. Now as of now this is not the case, but each others can view each other's database. So what I want to tell you is government is actually moving towards that direction. Okay, so merging or that integration, so that is actually happening at the internal level now. Each others can now view each other's database. Okay, so government is moving in that direction. Next point, at least 10% of the tax administration budget should be earmarked for taxpayers' services. Okay, so you need to take care of this taxpayer services. 10% should be spent for that, and equal amount, that means another 10% should be earmarked or spent for ICT based taxpayers services. Okay, so you have to spend 10%, you need to keep away 10% for taxpayer services, another equal amount 10% taxpayers services, which is information communication technology based. Okay, and what does that mean? Effectively, IT department should consider the taxpayers as their customers. Okay, so taxpayers as their customers. So now what is actually doing, they are coming to pay taxes, but you're humiliating and you're harassing them. So that should not be the case. You have to serve them properly. You treat them as your customer. Okay, because they are coming to give you money. And in IT department, or in case of taxes only, this will happen. You are going and paying money somewhere and you'll be harassed for that. Okay, so that should not be the case. You should be treated as the customer, or that you should treat the taxpayers as the customer. That is also one of the recommendation. Next recommendation is very important. The term is also important. I'll explain that. The 4th point, retrospective taxation. Retrospective taxation should be avoided. Okay, See, what do you mean by retrospective taxation? Retrospective taxation means, you are taxing the old proceedings based on a new law. See, that is not acceptable and not allowed also. You have a new law which came in 2000, let's suppose 19 or 2020 it came. So the transactions which you have done in 2017, 18 and which cannot be taxed ideally, okay? So there were some controversies in 2016. What actually happened is, when we discussed about GAR, I have told you already, GAR will not apply in the previous cases. GAR will apply only from the time in which it was introduced or it was implemented. So retrospective cases is not actually allowed under GAR also. There are specific cares, measures, safeguards has been taken in this regard also. Because this controversy was there in 2016, what happened actually is government exempted FIIs from CGT, capital gains tax, in 2015. So MAT is actually applied on CGT and IT, right? So what the government says is, the government send a notice, IT department send notice to FIIs by saying that you are exempted now, but you have to pay MAT in the previous cases, okay? So in 2013, 14, etc., you have to pay taxes, and it became a controversy, and finally government actually withdrew the notice which was sent. So this was an issue. So I just want to tell you what is retrospective taxation. Under this, actually government can tax you for a proceeding which have happened before, even before the law was introduced. So maybe 20 years before, if you have done some transaction, now the law is coming and imposing the tax on that. That is what we call as retrospective taxation, and that should not be there. That is a recommendation, common sense, common thing, okay, which has to be followed. Next point, permanent account number, that is PAN, should be developed as a common business identification number, CBIN. Now the government is moving after Aadhaar, so you don't want too many identification numbers, okay? So not relevant here. Next point, a tax policy council and a tax policy research unit should be established, okay? So what is tax policy council? Tax policy council is actually an expert body headed by finance minister to take decision on taxation issues, okay? So tax policy council and a tax policy research unit to be established. So tax policy council is basically an expert body headed by finance minister to take decisions on the taxation issues. Now, government set up a tax research unit. So here the name they have suggested is tax policy research unit, but government set up a tax research unit, TRU. For what it was set up? To facilitate decision making by tax policy council, this one that we have already discussed, by providing data and analysis, okay? The next point, customs department should pursue trade facilitation, okay? So under which you have easing of custom clearance norms. Second one, harmonization. See, it is actually as per international agreements. Even in the TFA, trade facilitation agreement, we are talking about it, okay? Then third one, custom clearance infrastructure including ICT. So these are the recommendations. Quickly, let's see that. The first one, the post of this revenue secretary as the head of IT department should be abolished, and it should be headed by a taxation expert. That was actually not accepted. And then you can see here the other recommendations that we have discussed. The Central Board of Direct Taxes and the Central Board of Excise and Customs has to be merged, and Central Board of Direct and Indirect Taxes has to be formed, and that we are moving towards that direction. I've already told you the database of each others can be seen by each other, and at least 10% of the tax administrative budget should be earmarked for taxpayer services, and another 10% for ICT based services. Okay, and then we have discussed retrospective taxation should be avoided. I've told you what is retrospective taxation, and then PAN should be developed as a common business identity. Okay, so you have to have a common business identity. Then tax policy council and a tax policy research unit to be established. Tax policy research unit, that is TRUT, tax research unit, is already set up by the government to support TPC. Okay, then custom department should pursue trade facilitation. So these are the recommendations. So I hope all are clear.